Navigating the Storm, Understanding and Surviving Global Economic Crises. Introduction. Global economic crises are part of life, but we often don't see them or talk about them. This article looks at some of the most recent and notable global economic crises, including the 2008 financial crisis and the Asian crisis. Financial crisis. The global economic crisis of 2008. The global economic crisis of 2008 was a financial recession that began in mid-2007 and lasted through 2009. It caused the U.S. housing bubble to burst and contributed to the collapse of large financial institutions exposed to mortgage loan failures. In response to this crisis, governments worldwide have taken steps to prevent further crises and repair their economies. These include banking and finance regulations, new restrictions on compensation and corporate governance, increased central bank support for public finances, central bank efforts to increase lending capacity, direct government intervention in the financial markets e.g., buying shares, and other measures aimed at stabilizing or reducing market risk. The following years saw a rapid recovery as governments pumped massive amounts into their respective economies, but growth remained slow through 2010 and some countries did not return until 2012 or 2013. The global financial crisis. The 2008 global financial crisis was a chain of events that led to the Great Recession. It began with a liquidity crisis in the United States banking system, followed by difficulties in obtaining credit for mortgage loans and savings accounts, freezing credit markets, and disrupting trade flows around the world. The central cause of this crisis was an overheated housing market, the bursting of the so-called real estate bubble, which began in the late 1990s and lasted until 2006. It collapsed when it became clear that many subprime borrowers would struggle to meet their obligations after refinancing or selling their homes at inflated prices during those years. Bank failures. Government bailouts were needed to prevent these collapses from doing even more damage to both the economy and people's wealth than they already had. Asian financial crisis. The Asian financial crisis was a period of economic and financial turmoil in the late 1990s that affected large parts of East and Southeast Asia, particularly Thailand, Indonesia, South Korea, and Japan. The crisis began in Thailand with the collapse of its currency and from there spread to Malaysia, Singapore, Hong Kong, China, Indonesia, the Philippines, and finally Russia. Late 2000s recession. The recession was a downturn in the global economy that began in 2008. The recession was caused by the financial crisis, which is defined as a sudden event or development affecting a group of people or an area. The recession lasted from December 2007 to June 2009, ending when economic conditions improved enough to be classified as a recovery. A recession is a general slowdown in economic activity in world markets, businesses, and industries. It has lasting effects on employment rates, production levels, and other economic indicators. There are many different ways to look at the global economy. The world economy is a complex system that includes many different parts, including the economies of the world. It is constantly changing and reflecting the world around us. The world economy is made up of the economies of countries where businesses and consumers interact to produce goods and services that are bought and sold in markets. The supply side of this equation includes workers producing goods or services, vendors who supply raw materials or machines necessary for the workers, government agencies that regulate production levels, and entrepreneurs raising capital to start new businesses. On the demand side are consumers who purchasing goods or services produced by others through their own labor, i.e., labor, or through savings from previous purchases, i.e., investment. The global economy is not only a reflection of these components, but also a reflection of people themselves, how well they understand how modern trade works or doesn't work, the role they play in an increasingly automated future dominated by artificial intelligence systems, and whether these AI treat us fairly enough when we are mere mortals but still need the help of our artificially intelligent overlords. Conclusion. We hope this has been a helpful overview of some of the biggest economic crises in recent history. It is important to remember that these events are not just numbers on paper. They have real and lasting effects on people's lives. For example, after the 2008 financial crisis and other recessions since then, many Americans lost their homes or savings because banks could no longer offer affordable mortgages with low down payments. In other countries around the world, including Greece and Italy, the debt burden continues to prevent governments from providing basic services like health care or education to the citizens who need them most.